Now let's discuss the Uniform Simultaneous Death Act. Imagine a scenario where Pearl is the insured and Dawn is the beneficiary, and they both die at approximately the same time, making it impossible to determine who died first. While this situation is highly improbable, it's still conceivable, like in the case of a shared auto accident. Instructor explains how the Uniform Simultaneous Death Act works. If the emergency medical technicians (EMTs) arrive at the scene and can't determine who died first, the law dictates that the insurer must treat the situation as if Dawn, the beneficiary, died before Pearl, the insured. This means that Malik and Ashley, as the contingent beneficiaries, would receive the proceeds from Pearl's policy, which aligns with Pearl's wishes. She wanted Dawn to receive the death benefit if he outlived her, but if he didn't, she intended for the money to go to Malik and Ashley. Now let's consider a variation of this situation. Suppose Pearl and Dawn are in an auto accident, and the EMTs determine that Pearl has died at the scene. Dawn, still alive, is rushed to the hospital but succumbs to his injuries on the way. In this case, Dawn was the beneficiary of Pearl's policy for a brief period, perhaps 15 minutes, before he too passed away. Now, the $450,000 death benefit becomes part of Dawn's estate, which he left to Malik, Ashley, and his 2 children from a previous marriage. Pearl never intended for this to happen and would be quite upset with this outcome. To prevent such a scenario, Pearl can purchase a policy with a common disaster and short-term survivorship clause. This clause states that if Dawn, the beneficiary, dies within 30 days of Pearl's death, he won't receive the death benefit, even though he technically outlived her. For Dawn to receive the money, he must survive Pearl by at least 30 days. If he doesn't, the funds default to Pearl's contingent beneficiaries, Ashley and Malik.
So, if I understand correctly, Pearl wants me to have the money if I live well beyond her passing. But if I die shortly after her, she'd prefer the money go directly to our children.
Exactly, Dawn. The Common Disaster and Short-Term Survivorship Clause ensures that Pearl's wishes are carried out even in the event of a shared tragedy. Instructor presents a thought-provoking scenario. Imagine a situation where Dawn is on life support, with his 4 adult children gathered around his hospital bed. His 2 children from his first marriage might be encouraging him to hang on for 30 days so they can receive a portion of Pearl's death benefit. Meanwhile, Malik and Ashley might be more inclined to let their father go, knowing that if he passes within the 30-day window, they'll receive the entire face amount without having to share it with their half-siblings. As morbid as it sounds, these situations do happen in real life. Great job on completing this video. Now it's time to test your comprehension of the concepts we just discussed. This video corresponds to ICAP quiz course number 27. Remember that number? Click the link in the comments section to access the Insurance Class Assistance Program, also known as ICAP. Once you're there, look for quiz course number 27. This quiz will help us see if you truly understand the material and are prepared to move on to the next video. Don't forget ICAP quiz course number 27. Good luck and keep up the great work.